This is the simple business dashboard we use with all our customers as a way for us to plan and ultimately to scale a business. So a lot of things will feed into this as a dashboard, and it may be backed up by some business intelligence already that you have set up. But this is a really simple starting point, an exercise that can be done in less than an hour, I would say. And it gives you a sense of current revenue, product and service lines, the contribution to revenue across different channels, as well as, different things within your business, set targets, rev ops budget, isolated marketing budget, other looks at numbers, and whether you're a commercial leader looking to get new budget, whether you're a business owner, whether you're a shareholder, and your business is B2B, doing between 5 and 50 million. So in that sort of mid-tier range, this is a really good starting point. Again, if you're working with a new vendor, as an example, this is a good place to start with, especially if they're responsible for growth. So what it is it's a digital growth ROI calculator, a really simple one that we've built to just get to the heart of the business really, really quickly. So for us, we use it to forecast the digital growth potential of a business, evaluate ROI and maybe blockers, and basically understands what it takes to be to break even, to be profitable, and to try and predictably grow a business. So what I've done here is I put in some dummy data as a starting point, just to get a sense of, some of the different outcomes that we could be doing it for. So again, this can be for commercial leaders looking to, ultimately present to leadership and get more budget for their specific programs, or probably more importantly, or not more importantly, probably for even more relevant, it's to, owners, shareholders within a business, as a way for them to get a quick snapshot across everything. This is going to be done in other formats already, with your accountant, with your other leaders. So whether you have all of this to hand, whether you have another version of this, whether it's already automated, amazing. But again, this is a good sense just to, get that reality check of where we're at. So for us, how we've broken it down is different metrics, the values associated with them, your calculation percentage based on it's a certain targeted. So some of it will be targeted revenue, others it will be a different target as well. Some specific notes in here. Over time as well, this is amazing. We love to do this for customers, is put in benchmark data for that industry. And then again, when you have those targets put in, give yourself a progress bar so you have a sense of where you're at comparatively to that. So again, not everything is filled in here. I've just put in some dummy data as a starting point to give us a reference. So what I have here is company A. They're currently doing 5 million revenue. We have growth rate projected for the year ahead. So again, depending on what we put in there, let's just say it's 10% growth rate. So net new revenue for the year ahead, 500k, gives us projected revenue of 5.5 million. So again, really good starting point for us to get a sense of clear targets. Okay, you'd be amazed at the amount of businesses that don't have that clarity of target and objective in the next 12 months. So really, really simple starting point. That this might take 5 seconds because it's already top of mind, or it might uncover discussions between yourself and your leadership team to really settle on targets and where is that coming from. Next, we're going to start going down to the next sort of line items, right? So this is looking at current cost centers in the business. So I'm going to look at it in two ways. Number one is marketing spend. Okay, so marketing spend I've put down as 250,000. So again, this is where there's a whole other session on classifications, taxonomies, all of these different ways to make sure that, okay, what are we determining as marketing spend? For the sake of this, we might say marketing headcount, activation and / ad spend, plus maybe agencies, consultancies, and contractors, maybe a videographer. So let's just say the budget is 250k, which it gives us about 5% as a reference, as a ratio to budget, as a ratio to revenue. So around 5%. This is way too isolated as a way to see its overall contribution to revenue. Okay, so normally this might be something that a company has that we work with quite quickly, and they may or may not do it as a percentage of revenue, which we do not like, as doing it as an isolated metric. And the reason is the number we're trying to get to is to see what does it take in your business to generate revenue. Okay, so really, really simply, and this is like the language of this will change depending on the context of your business and industry, is we want to try find your marketing spend, your sales and BD spend, or prospecting as well, and ultimately let's just call it your customer success budget. So people who are responsible for the retention of your customers. In tech and SaaS, it's a client success manager, and lots of our legacy businesses that will not be the name. It will be a different type of name, client or account director, and others could be certain engineers, but they're more responsible for, let's say, the relationship side of businesses. Group all of those expenses together across headcount, across all of the different things, and let's just say as an argument to maintain that revenue level, it costs, let's just say, 1.75 million. Okay, so now as a percentage of revenue, we have more of an actual real input of where we're at. And this is not taking in OPEX, CAPEX expenses, your set profit level and so on. So it gives us a sense as a starting point to have a better understanding, one, of our customer acquisition cost, but also what it takes to keep and generate revenue. And for us to be able to diagnose where's the inefficiencies within that, rather than looking at any one of these. Obviously I've highlighted marketing, but I could do the same for any of the other ones, to just have it isolated and trying to be making all the efficient gains within that. You want to look at it at a more macro level and to see, okay, across these multiple functions that interlock between pre-sale, during sale, post-sale, where can we eke out greater gains, where can we make savings, and so on. So I've already jumped ahead to the next point, but the next one is around your customer acquisition cost. So again, as an example, this is where we generally fall short a lot of times with customers where they don't have that exact number. So let's just take for argument's sake, in this case they do. What I love to just put in here as a really simple one is we get an understanding of two things. One is the average revenue per customer or per user is the term obviously is in software, but for us we can use U or a C there. And then what I'm just going to get is, I'll just change this because I normally do it as a different calculation, ARPU. So what I do here is, what's our customer acquisition cost as a percentage of your first year's projected revenue? Of course, that might be a blended mix, right? But just as an example. So this already is starting to show, okay, geez, if we feel that's a huge number, but if that is actually the true estimate, that, okay, we can do different event programs, offline programs, we can increase spend. Again, if this customer type was worth 10, it completely changes the picture, obviously. This is a static input we'll get from the business. So, and again, it might need to be calculated, it might be known, but what's the average year's retention to give us the lifetime value of a customer? So 400K, let's say there's 50 customers currently at that amount, and net profit margin. Okay, so these are some of the static inputs. This might take 5 minutes if everyone has those numbers, or there might be a bit of an uncovery session to get this. These inputs are now going to give us some outputs based on what we're trying to do. So other potential references are, let's say, halfway through the year, new marketing expense comes in, a new event we want to do, a new hire, a new contractor, so on, have it in here. What I've put in here is, for this example, let's say your OPEX budget for the year, that's, again, it can be classified in different ways, but all your operating expenses within a given year, your churn rate, estimated new clients value. As an example, I think that might be wrong. I think that might have been an old dummy data. Just want to make sure the outputs down here work. Net revenue retention, total employee headcount, contribution margin if you want it, if there's a bigger ad expense, close rate again if you want it as well. What we do down here is, what are the different products or services that contribute to revenue? Again, that can give us a different output. And example, maybe again, if we need certain programs to deliver a certain number of leads based on, let's say, differing close rates. So, each of these products and services probably have different close rates. So again, the investment, the different micro economics or unit economics even change based on that. So the reason to give us all of this starting point is really so that when it comes in here at a glance, we can report back to leadership, or we can have that information ourselves as business owners at a glance of what's the makeup of the business. Are we in a good place to scale, grow, predictably grow ultimately? And what are some of the high level stuff that we need to do? This again, when you're running multiple programs, when you're trying to grow into new territories, when you're taking on different cost centers, this is where having that macro viewpoint is good to give you that frame of reference, and then you can dig a little bit deeper based on, ultimately where to spend your time and energy and so on. So at a real big glance, what's this looking at? So this is our ROI calculator. So this is pulling in two numbers. So it's looking at our total targeted revenue, and it's minusing our RevOps and then dividing it by that. So it's saying, look, if we hit that targeted revenue based off the same current cost centers, we're, in the green. We're not losing money. So it's a 2-to-1 return on every euro invested, give or take, in RevOps. So again, a good starting point. We can diagnose and dissect these in greater depth if we need to. So again, what we have here is B16, which is LTV divided by B13 CAC. So LTV to CAC, the classic metric, as a way for us to say each time we invest, €1 into our customer acquisition cost, we're getting 16 back. Amazing. It's a free money factory in essence. Other ones here are break-even analysis, how quick to break even, also across that. Our payback period, so this would be 9 months, so it's just denoted as a percentage of the year. So 9 months of getting a customer, all things being equal across our average value per year and the number of years, we're getting paid back in 9 months, so 0.75 the percentage of the year. This is for the extra 500k in revenue we're taking on if our RevOps remains the same, and so on. Oh, is that marketing? Let's just double check what I have in here so it makes sense. B21. B21 is the OPEX, and marketing spend, what is the other one? B11. Marketing spend. Okay. So this is more as a relation to marketing spend. In terms of projected LTV, again, this is our average revenue per customer by 1 divided by the churn rate. The churn rate is 25%. So again, that's what gives us our projected LTV. Forecast accuracy is normally, as you go through an activity like this, getting an understanding then obviously of how close you are to that. So really, really, really simple. Obviously what we actually hit within a given period versus this. So again, you want to actually put the numbers in. Getting that as close as you can is really, really important. It gives you that confidence and predictability in how you grow and obviously ultimately the growth you're anticipating. And again, a really simple revenue per full-time employee. This business and dummy data is currently at 142. So again, there'd be different targets set to that based on your efficiency, your scaling, your growth, but also your capacity to deliver on the work as well. So there's probably a number and a ratio you're looking at there as well, but we could add in even more here on the cost side. Haven't put in any dummy data here, but as an example, as you build out these different marketing programs, this is where you can get that blended view at a high level of your CPL, your CPA, your ROI, obviously your ROAS, as it relates to certain marketing programs. And then at least your base averages. So let's just pretend this was €500. We've already said CPA was 25,000. As the example, as we start to dissect these other marketing programs, you can then get a sense and say to leadership or for yourself to know as an owner what is above or below mean. And again, that gives you a sense of a good starting point, a good base starting point to be able to dissect different things. So this is, in essence, what this ROI calculator is. There's lots of these numbers already, shared and taken in business, but this just gives you that sense of, okay, maybe a blank slate or, pulling numbers in from different areas, or just gives you a chance to review stuff that you already know but maybe hasn't been verbalized in a while. So it's a really good activity. We do it with all customers in the strategy phase of working with any new client, any new legacy, any new B2B business we work with. We do this as an exercise, as a way for us to get a good understanding of the unit economics within a business, and ultimately for us to see, right, are there any choke points here to scaling? Especially as we break out more of the product and service lines within a business, we get that understanding of ultimately, there are some parts of a business that can scale and others that maybe, require some internal changes before doing so. So if you enjoyed any of this, please feel free to reach out to myself on LinkedIn or shoot me an email, tadhg@csmagency.ie. So really appreciate your time and chat soon.